Welcome to Talk Tickers, where we break down the earnings calls so you don't have to. And let me tell you, the Ark Restaurants Q4 call was something else. This was not your typical restaurant update. Nope. This was all about legal drama, a massive casino bet, and one of the most tense Q&A sessions I've heard in a while. So let's dive in and figure out what is really going on with this company.
So before we even get into what management said, let's look at what the market heard. The stock dropped almost 4% on the day of the call. That right there is the market's vote of no confidence. It kind of sets the tone for everything else we're about to unpack. So the big question is, what spooked investors so badly?
Well, the answer starts right here with these headline numbers. And yikes, they are not pretty. You've got a net loss, revenue down a whopping 14%, and look at that adjusted EBITDA. It swung from a positive $500,000 last year to a negative $1 million loss this quarter. But the real gut punch, that same store sales number, down over 10%. That is a huge red flag and signals a major crack in the core business.
So what's causing all this damage? Well, if you ask management, it's not that the whole business is falling apart. No, they want you to focus on one single massive headache, a nasty legal dispute over their flagship Bryant Park location in New York City.
And they were not subtle about it. The CFO came right out and said it. The entire decrease is because of Bryant Park. I mean, that is a bold statement. He's essentially saying, hey, don't look at our day-to-day restaurant operations. The real story is this legal fight. It frames the whole quarter as a special situation completely dominated by this one conflict.
And to be fair, you can see why they're so focused on it. Just look at this. Bryant Park makes up over 15% of the company's entire revenue. So yeah, this isn't just some small cafe they're fighting over. This is a crown jewel asset, and having its future up in the air like this is a massive threat to the whole company.
And this fight is costing them, big time. We're talking $2 million in legal fees for the year. But that's not all. They've also lost another $2 million in catering business because nobody wants to book a big event when there's this much uncertainty. So it's a double whammy, it's draining their cash, and it's crippling what should be one of their most profitable venues. Okay, so Bryant Park is clearly a dumpster fire right now. But what about the rest of the company? Well, it's actually a much more mixed picture. It's not all bad news, and management was pretty quick to point out that some of their other restaurants are doing just fine, thank you very much.
And this really shows you that tale of two portfolios. On the one hand, you've got some real bright spots. Vegas, for instance, actually improved its cash flow even with fewer people walking through the door. That's a sign of good management. But then you look over at the trouble spots. Florida's down 5 to 7%, and the D.C. market is soft. So it's a mixed bag. They're executing well in some places, but getting hit by bigger economic headwinds in others.
So with all these problems, what's management's big defense? What's their answer to all this uncertainty? It all comes down to their balance sheet. They pointed this out over and over again. They're sitting on over $11 million in cash, with only about $3.6 million in debt. That's their safety net. It's what gives them the breathing room to fight these legal battles and ride out the storm.
Now let's pivot to the topic that management was really excited to talk about. And it has nothing to do with food. It's their massive all-or-nothing bet on getting a casino license at the Meadowlands in New Jersey. Forget the restaurant business for a second. This is the lottery ticket that they think could totally transform the company. And this isn't just some side hobby. They have already sunk more than $5.2 million into this project. For a company this size, that is a huge chunk of change to put on a single, highly speculative bet. And if you're hoping for a quick payoff here, well, don't hold your breath. I mean, just look at this timeline. The very first step is a voter referendum that's still more than a year away. A temporary casino couldn't even open until 2027, and a permanent one is a 2028 story at the absolute earliest. So much has to go perfectly right for this to ever see the light of day.
But here's the kicker, a little plot twist that came out during the Q&A. Their old partner on this project, Hard Rock? Yeah, they're out. And not only are they out, they're now backing a competing casino project just across the river in New York. This raises a huge question mark over the whole plan, and it's what set the stage for the fireworks on the call.
And that brings us to the main event, the most telling part of the entire call. This is where the frustration that's been bubbling under the surface just completely boiled over. You had an analyst who was clearly fed up, and he let management have it.
The analyst Jeffrey Kaminsky didn't pull any punches. He basically said, look, the stock is at a new low. What is the actual plan to fix the restaurant business? Because this whole Meadowlands thing just looks like a Hail Mary pass at this point.
Well, the CEO, Michael Weinstein, fired right back. He completely rejected that idea. He said, I don't think it's a Hail Mary at all. Quite the opposite. I'm very optimistic about it. So right there, you have this fundamental disagreement on the entire strategy of the company.
But the analyst wasn't done. He came back with an even sharper question. He said, okay, if you're so optimistic, why aren't you or any other insiders buying the stock? And then he just drops the hammer. The market has gotten it right, Mike. Oof, that's about as direct as it gets on an earnings call.
And the CEO's response? He just shut it down completely. That's a question that's not appropriate. And that right there, that moment of pure defensiveness, it really tells you everything you need to know about the tension on this call and the disconnect between management and some of their investors.
So wow, you take the ugly numbers, the legal mess, the casino lottery ticket, and that investor showdown, and what are you left with? Where does Ark Restaurants go from here? Let's put it all together and figure out what to watch for.
All right, here are the 5 things you absolutely have to keep on your radar. First, obviously, is the Bryant Park lawsuit. Any headline, ruling, or settlement there is going to move the stock, period. Second, we need to see if they can stop the bleeding on same-store sales. Third, that casino project needs a credible partner, and soon. Fourth, listen for any updates on those weak spots in Florida and D.C. And finally, you can bet everyone is going to be watching the insider filings to see if management puts their money where their mouth is.
So based on all that, here's how we see the stock trading. In the short term, expect a lot of chop. It's just going to bounce around on every legal rumor. The biggest risk, the trapdoor, is a final loss in the Bryant Park case. That could send the stock spiraling down. Now, for the upside, you're really going to need a miracle. Either a shockingly good settlement out of nowhere, or a huge blue-chip partner signing on for the casino dream.
Which brings us to our final call. When you weigh the weak operations against the massive legal uncertainty and the incredibly long timeline for any casino payoff, we have to initiate our coverage with an underperform rating.
You know, it really just boils down to this. Investing in Ark Restaurants right now is like betting on 2 coin flips. You're betting on a judge's ruling and you're betting on a future political vote. The problem is, the core business just isn't strong enough to provide any kind of safety net if or when one of those coins lands on the wrong side. The risk just seems to outweigh the reward right now.
And as always, please remember, this is not financial advice.